As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're delighted to have a returning guest tonight, Brother John F., founder of BrotherJohnF.com and BrotherJohnF.biz, the companion member site, is here with us again on Reluctant Preppers. He's a well-known advocate for the common person. In fact, the tagline under his site is Silver for the People. Brother John F., thank you for joining us again here on Reluctant Preppers.
Thanks for having me again, Dunnigan. Appreciate it.
If we could kick off tonight by just giving you a chance to briefly introduce yourself and your background. We've had multiple viewers ask us, who is this Brother John F., and why do you have him on, and what is his claim to fame? So if you could give us a little understanding of where you're coming from and what your background is that gives you the platform to comment on the silver market.
Sure. Well, by the name, anybody could tell that I was kind of choosing anonymity early on. I started a YouTube channel back in, I think it was 2007 when I started. I started doing silver videos, probably 2010, 2011, something like that. Been stacking silver pretty much my whole life. My parents got me into physical silver. But I spent some time in college, have a philosophy degree, went to law school, didn't like that, got a Series 7 stockbroker license, did that for a while, been a Series 3 commodity broker for a while, and then just started messing around with investments and found physical silver and the story behind it, especially the writings early on of Ted Butler would be somebody who probably influenced me more than anybody else, as I just got into really the conspiracy behind why they're suppressing the prices of precious metals. And then so I decided, well, I need to speak out about this and try to educate people about it. And that's how my YouTube channel started. And I started a blog after that and a member site.
If we could then follow on to have you give us your insight into what the heck is going on with the precious metals markets. We saw through all of last year, 2016, a pretty much impressive rise throughout the year in precious metals, more notably silver. And this year, very confusing, sort of false starts and retracements and false starts and retracements. And we keep hearing from different parties, depending who you ask, that this is just the ongoing mispricing that's caused by the paper silver market that's taken the place of actual price discovery in a physical realm, as well as a distracted public that's off looking at, Dow making record highs versus things that actually have intrinsic value. So if you could give us your insight based on your latest research on what your understanding is of the macro factors that are driving the precious metals markets, and what you personally, your most favored scenario, or what you think is the most likely scenario, say for the rest of this year and beyond, for silver specifically.
Sure. Well, let's start with silver. Just recently, I think Rob Kirby alluded to 50 million ounce smackdown. I think it was July 7th, but don't quote me on that. But we had an uptick in the price of silver after hours in Japan, ticked up to about $16.20, I believe it was, and immediately crashed to, I think the low was $14.15. But I've read some information that apparently some of the trades were backed out of. Very interesting. Now, we had silver kind of fall from there, going down to a low of about 15.20. Now we're back up to 16.26. So that was kind of, for me, maybe be looking at kind of a last gasp moment. One of the reasons why is because just the way they did not want to let the prices stay down there. In other words, they didn't really let anybody trade at those prices for real silver. If you listen to the latest interview with James Turk, where he talks about this issue, he brings that point up. It's very, very important that what he points out is that they have a certain amount of ammunition. That's physical bullion that they have to use to suppress the prices, because at some point they have to deliver something. If there's a complete disconnect, then the whole thing shuts down and it's pointless. So, but they don't want to get rid of their ammunition for super low prices. So it seems to me, by the recent activity of what they've done here, it looks like they believe that 14 is too cheap for them to even part with it. We know the U.S. government doesn't really have any stockpiles anymore. They got rid of those. I think it was back in 2006 when some friends of theirs in the banking sector created the silver ETF, where people think they're buying silver. I'm not really sure what they're buying. We've seen comparisons of the bar lists and some shenanigans looking at those bars, so I'm not really sure what's there. But so I've always been an advocate of stacking physical silver. I think that at least on the member site, when Bitcoin hit, I think it was when it hit 2,500, I did a video on my member site recommending that members should think about swapping some Bitcoin for physical silver. There's a couple of websites. I'm no way endorsing them or anything. Don't get any money from anyone except for members, but I do have some advertising on my main site to pay for it. But JM Bullion and Provident Metals are two that I know of that actually quote silver, physical silver. You can get it in Bitcoin, and the price is just a little above spot. So it's actually the best price you can get on their silver, except for the wire transfer or check cost. And so that's a good deal. I was recommending that people take some profits in their cryptocurrencies. Some of them had tremendous runs, Ethereum up 200-fold and others, and it just looked like a good time to take some profits. So recently Bitcoin has bounced. Silver looks to be bottoming. Again, we're still in a very good position where if you want to trade out of some cryptos and accumulate some physical silver, it's a pretty good time. I think that 14 is the number that they decided to move with and prop things up, not let them go lower. Is 14 the equivalent of the $8.50 to $9 price that we got in 2008? Maybe inflation adjusted, it's pretty close because we didn't really get silver trading below $9 for very long, and you really couldn't pick up much at that time. It was the fall during the financial crisis. So if we use inflation adjusted numbers, we're very close to a low, for a very, very long time.
It's interesting because they often talk about in a frothy, exuberant market how there can be a blow off top, and it almost made me think when you were talking about that flash crash that happened that day when it got smacked down, like $1.50 in a minute. It's like, is this the blowout bottom?
Well, you can have those sorts of things. I'd like to trade technically, and unfortunately, really the only thing I can trade technically right now is cryptocurrencies because they're really the only real markets right now, and some of those aren't even real. But you can have an exhaustion bottom where the selling is just exhausted. I mean, that's this whole concept of contrarianism and the idea of going against the crowd. I mean, if everybody is bearish, everybody in the absolute world is bearish, on something, then they're either short or they don't own it. That's a whole lot of people to come in. So, contrarian wise, absolutely, it is starting to look like an exhaustion bottom.
Would you remind those of us who have been stacking for some time already have heard some pretty compelling arguments on why silver is a lower risk long-term value play as far as a store of value, but is there any other aspects from your research or discussions you've had with people that have been on your show in the last several months that have opened your eyes as any new perspectives, any new awareness about some of the intrinsic value of silver or reasons why it decreases risk? If you could just kind of give us what would be like, your top 3 or 4 reasons why people should seriously consider accumulating silver.
Sure. Well, silver is, when I look, into precious metals, price suppression, manipulation, etc., silver really seems to be what I've always called their Achilles heel, because silver is not anything like gold. The central banks of the world all have stockpiles of gold. Now, they're going to tell you that it's a barbarous relic. Actually, the quote is not gold is a barbarous relic, but the gold standard was referred to as a barbarous relic. But they still stockpile it, and they're still on it. So they still trade gold back and forth between each other. The Chinese, who seem to be the up-and-comers right now, they are stockpiling as much gold as they possibly can. They're not exporting any, and they're importing, if the numbers are correct, I don't know how they could be, but apparently they're importing practically all that's mined every year. So where's this gold coming from? I don't know. But so silver is totally different than that. There aren't a bunch of countries stockpiling it. And if countries tried to, the price explosion would be absolutely insane. You have to remember that only 800 million or so ounces are mined every year. 800 million ounces of silver at current prices is just over $12 billion or something? Some ridiculously low number. $12 billion. I mean, Bill Gates can write a check for that, and that's the entire mining supply 1 year. And we don't know what the stockpiles are. So silver is really their Achilles heel, and you can see it by the way they behave. I mean, I've pointed out in the past the coincidences of when silver smackdowns occur. The real famous one was the May 1st one, when we had Obama releasing his birth certificate and bin Laden supposedly being captured, if you believe anything that the media tells you. And then we get a surprise smackdown of like 5 margin hikes in the middle of the night, and silver was just about to break out through that $50 price and run. And that probably would have brought a lot of buyers in, because you have to remember, when we're promoting people stacking physical silver, we're talking about a fundamental investment. We're talking about protecting their wealth using something that has a fundamental value, something that hopefully won't really decrease in value, although it's questionable as to whether the dollar is the proper way to value it. But, whether you want to value it just by straight ounces or value it in Bitcoin or value it in dollars, it's a very, very low price. There isn't much of it around. And for me, it's just still the best deal out there if you're talking about trying to protect yourself. Now, if you're talking about trying to make money on a trade, it's been absolutely horrible. I mean, we're still in, if you want to call it a bear market, from that near $50 top, and we're about at $16. So what's that? Do the math. I don't know, a 2/3 decline. And so, technically it's not something people are going to jump on to trade and make money. It's just something to stack. Now, at some point, it probably will be. And I think that's the main reason why they wanted to take out that $50 price, high that it was going to try to take out. That was the high made in 1979, 1980, when Volcker took over, and they had to stop gold and silver and the Hunt brothers and all that. So it's a very important psychological price. And if silver goes through $50, I mean, it can easily run to 100 or 200 or 1,000, like I said, because there's so little of it.
In fact, can we talk about that? What do you know about the relative scarcity of investable silver versus gold?
Well, like I said, I think it was James Turk also talking about that smackdown in silver, but I think it was 50 million ounces of silver, and then also gold. I don't remember how many ounces there were, but somebody has suggested on one of the message boards, I think it was on Zero Hedge, someone suggested, well, why don't they just go, if gold is at a premium and trading at a premium for large numbers and the large numbers aren't available, why don't they just go to all these bullion places and buy? And so I, just out of curiosity, went to a bunch of them to see how many 1,000-ounce, actually they're kilo bars. I'm not sure what the deliverable is. I think the COMEX is 100-ounce gold, and we know the silver's 1,000-ounce. But just to see what you could actually buy if you were a big buyer. And it turns out there isn't much. I mean, the little guy, there's plenty of silver for him, and there's plenty of gold for him for little guys. But for big guys, there just isn't that much out there. Now, of course, there's a lot more gold out there, and we suspect that it's all heading east, or the vast majority of it is heading east. And there's a suspicion that either the Chinese are going to try to back their currency, have a freely floating currency and have it maybe backed by gold or a partial backing, or maybe the Chinese want to go with the IMF and their scheme. We're not really sure, but it seems like the West is bleeding the gold they have and it's being taken up by the East. And as far as silver, that's not really a part of that. Although China does not export any, and silver is tremendously in demand for manufacturing, it appears that this sort of war between the East and the West is being played out with gold. But silver always follows gold. It always has. Sometimes it leads gold, but generally they tend to move together. Right now, the gold-silver ratio is horrific. I think it's at 80.
That's exactly what I was going to ask you next, was about the gold-silver ratio. But before we get onto that, we will come right back to that. But just on this point of China not exporting silver, and you mentioned this war over gold between the East and the West. It hardly seems like a war if it's all flowing one direction. Are we wrong about that, or is it been a one-directional? Every part of this war has been depletion of the coffers of the Western Hemisphere banks and amassing of gold and silver into China, India, and other Pacific Rim countries.
Well, yeah, that's what we would presume. I mean, we only know what they tell us, and we have to kind of guess at the rest. The reason, you say it's kind of really only a one-way war. Well, there's the war that's fought, and then there's the propaganda of war. And the propaganda in the West is that gold doesn't matter anymore. Now, I don't really know what the people in the West are thinking. And they may actually be thinking that this time it's different. That's a very famous saying, because everybody talks about how in markets people say, well, this time it's different, and it's never different.
Yeah. It was like the internet bubble in the stock market. That's what Greenspan kept saying. I guess old valuation rules don't apply anymore, et cetera.
Right.
New efficiencies.
So maybe they're banking on the fact that it is different this time, and maybe it will be different. Maybe something like Bitcoin or something new is going to come out, and maybe the West knows it. I don't know. But the Western leaders seem to be gambling that they can run this debt thing and continue to amass huge debt, huge deficits, run massive trade deficits, let everything that's of value flow to China, and including the money, and buy cheap plastic junk over here. They're still doubling down on that model. We're not seeing really any change with Trump. We heard a lot of talk, but we're not really seeing any change.
Could we return now to that topic we touched on a moment ago about the gold-silver ratio? Why is that significant from a fundamental investing standpoint, and what is the historical trend, and what's going on now?
Sure. The gold-silver ratio is just something that people have watched for many, many years. And, you have different ratios. You have the ratio that's sort of in the ground ratio. And historically, people have bandied about terms 16 to 1, 15 to 1. Some have talked about 12 to 1. If you look at, what the prices have done in the past, if you remember when silver hit $50 in 1979, 1980 at that peak, gold hit $850. So what are you talking about? 17 to 1, as opposed to where we are right now, 80 to 1. So the question you have to ask yourself, first of all, is if this ratio, mining ratio, is correct. And a lot of people will tell you, a lot of people who are more experts than I am on mining, Jeff Nielsen and other people, will tell you that the silver to gold ratio out of the ground has actually been decreasing. So it's crawling down from, say, 16, 15, closer down to 12 and 10. Part of the reason for that is, I assume, I've read various people say that silver is lighter, and because of that, it's actually found higher in the Earth's crust. And because of that, a lot of the really big silver finds, the big stashes of it, like the Comstock lode, have already been mined. So that number begins to decrease. But the big question is, why doesn't the price of silver reflect the real ratio of how it's mined? And I think the answer is really simple: suppression. Price suppression is that much worse in the silver market than it is in the gold market. And if it's true that all price manipulations eventually fail, then if this one fails, the price move for silver is going to be spectacular compared to the price move for gold.
Is it fair to say and to think that, as happened, you mentioned in the 1980 run-up, that in a future run-up that there would be more of a return when it becomes a physical dominated rather than a paper suppression dominated market price, that we would expect a more of a normalization to either a historical average or closer to the current production ratio?
Well, you're going to have a return to real markets first. We don't have real markets anymore. We have fake markets. We have markets that are manipulated by central banks. We have central banks openly buying stock in Apple Computer. That's crazy. That's insanity. The central banks are no longer even doing what their stated goal is. They're just simply propping up bankrupt Western governments. And so we don't have markets anymore. And certainly the COMEX is a fake market. Just about every market for gold and silver is fake. So it's probably going to have to be foreigners that put the pressure on. It's going to have to be someone outside of the Western banking system, whether that's the Chinese or the Indians or some player that we haven't seen yet. I don't know. But I don't think that you're going to see real markets in the West until we have some type of catastrophic collapse. We have unbelievable levels of corruption in this country. The corruption in this country is so mind-boggling. The level of people that are sold out to moneyed interests, whether you're talking about in medicine or law or universities, government, lobbyists. We just have corruption from top to bottom in this country. It has to be cleaned up. There has to be a crash. A new system has to be put in place where we have honest markets. Before that, I just can't see it happening here.
For people who are interested in reducing the catastrophic risk, the people who perceive that there is catastrophic risk of systemic collapse in the financial system but want to protect themselves, their household, their family, their children and grandchildren from catastrophic financial losses, how does physical precious metals ownership play a role in that protecting of your own home, your own well-being?
Well, most of the things that people consider their investments are actually just somebody else's debt or somebody else's obligation or promise to pay, whether it's a stock certificate or a bond or an annuity. An annuity is just the insurance company paying you money. What if the insurance company goes bust? So, if you're talking about a catastrophic systemic collapse, something like what happened in the Great Depression, which we're definitely overdue for another one, whether you're looking at 70-year cycles or, as Jimmy Rogers says, 4-year, 8-year cycles, we're overdue. We're overdue even for a normal recession. So we're overdue for the small one, the medium one, the big one, and the super monster one all at the same time. And of course, that's how whatever those, whether you're into Kondratieff waves or whether you're into Elliott wave or whatever, that's normally how those giant ones occur, is that all of the little ones all line up and then the giant one comes at the same time when they all line up. So when you're talking about that type of catastrophic collapse, you're talking about your assets being what somebody can pay you, and what if they go broke? Physical gold and physical silver, and I would argue cryptocurrencies, if a moderate amount of them, if you're worried about the risk, are something that you control. They're not something that somebody else owes you. They're wealth that you can store yourself and can be converted into other currencies if necessary in an emergency. Silver is absolutely fantastic because we have in America these wonderful junk. Some people get upset by calling it junk. It's just a term for scrap dealers, but junk silver, that's dimes and quarters and half dollars and dollars that were minted prior to 1964 and before for 90%, and then there was some 40% up through 69. But those coins, you can still buy a silver dime really cheap, a couple bucks. So just about anybody can do it. Anybody can stack physical silver, whether they're rich or poor. The real ones who can't do it, I guess, are the rich, the super rich, because they're not going to be able to find $50 billion worth of silver. It doesn't exist until the price goes much, much higher. But the little guy can stack little amounts of silver, protect himself for whatever he can. And so that's why it's such a great investment for those who are looking to protect themselves in some type of catastrophic collapse.
You mentioned cryptocurrencies a couple times. If we could rotate our attention to them more fully now. We had Andy Hoffman on earlier in the month, and he talked about, in his view, Bitcoin and Ethereum and cryptocurrencies in general, being allies with gold and silver against the distortion of fiat. And you mentioned in passing earlier on that cryptocurrencies, in some ways, that those markets are actually performing more like real markets, at least some of them are, than the precious metals markets are. So could you weigh in on those two topics? One, do you see cryptocurrencies as allies with gold and silver against fiat? And also, do you see the cryptocurrency markets behaving more like true markets than the physical gold and silver markets?
Yes, absolutely, to both of those. When I started covering Bitcoin in 2011, I started a domain. It's no longer in existence because it was the bitcoinchannel.com. And it was my opinion that people needed to know about this. But I think the term that I put on there was cryptocurrencies will destroy the banksters' control destroying their fiat money or something like that. And, something similar to what I said about silver is the way to destroy their power. If people just bought that, if enough people bought it, then they're finished. But same thing with cryptocurrencies. And the reason why is because it's money that they can't control. It's decentralized. There is no central point they can shut down. There have been plenty of people, plenty of, some would argue, dumb people who have gone against the feds, whether that's, Liberty Dollar or, all these other various schemes of getting some type of alternative money rather than this fiat currency that we're forced to use by these Fed banksters. And, these people have gone to jail, whether it's for, counterfeiting or whatever, you name it. But Bitcoin, Ethereum, other cryptocurrencies, and there's now over 1,000 of them, they are decentralized for the most part. Don't be deceived thinking that they are all decentralized just because they're cryptocurrency, because that's not true. But there are cryptocurrencies like Bitcoin and Litecoin and others that are absolutely 100% decentralized ledgers that exist everywhere in the world, cannot be shut down. Any place there's an internet, they can be accessed. And so that's something they don't control. Now, that's very important because if they don't control it, then they can't control the markets for it either. So right now we have a number of markets, and a lot of people have, the black eye that Bitcoin has been given in a lot of people's minds has actually been the exchanges going down. It started off with Mt. Gox going down, and Mark Karpelès recently, I think he's just on trial right now in Japan. And we have, I think it was Paycoin. We had the Cryptsy exchange go down. So we've had these exchanges go down, and people have associated that with the cryptocurrencies. Well, it's not the cryptocurrency that went down. They were fine. It's just the exchanges where they were being traded. But if you look at those exchanges, there aren't very many exchanges where you can short Bitcoin. Now, I think you can on Bitfinex right now. You can put up margin and short it. But again, you have to have the Bitcoin to short the Bitcoin. So you have to put up a certain amount to short it. And so if the only people who are selling something are the people that have it, that makes it very difficult to manipulate markets. If you think about silver, the reason why silver is such a manipulated market is because the bankers are selling silver that doesn't exist. They're selling fake silver. They're selling 50 million ounces in 1 second in Japan that doesn't exist. No one can deliver it. So that cannot happen with cryptocurrencies because the bankers, first of all, they don't have any. We don't know how many. Maybe I'm talking about Bitcoin. When I said the cryptocurrencies, I'm talking specifically about Bitcoin. But, we don't know with the Silk Road being seized and, the FBI and that giant fiasco. That's a whole nother story. But we don't know how many Bitcoins the Fed seized. We don't know where the Mt. Gox Bitcoins are. So in theory, maybe some governments could have. There were the Chinese as well, shut down those exchanges. We don't know how many Bitcoins governments might have, but maybe they have a few million. Maybe they can sell them all at once. But if they sell them all at once, then they're out. They don't have any more. So it's very difficult to suppress the price of something that you don't have, if not impossible. And that's why we're seeing in these markets, I've been trading the altcoin markets primarily on Poloniex exchange. There are other exchanges, Bittrex. The exchanges are exploding. Numbers of exchanges are increasing about as fast as the number of cryptocurrencies are increasing. So, we have tremendous growth on that side as well. But from my trading, what I've seen in these cryptocurrencies, especially in some of the alts, I've seen very reliable technical indicators such as breakouts, support and resistance, trend lines, and moving averages, all of those things working properly like they should work. And that's if you're a technical trader, that's how you make money. You buy the breakout, you look for the pullback, and you add to it when it rallies. If it works, well, you can't do that in stocks. All you can do is buy Apple or Amazon early on, hope you were the right people, and you didn't buy, pets.com, and that's about it. You just got to hang on to it. So, yeah, they're real markets. It's very exciting. I don't see it going away. Yes, we'll still see more exchanges blow up and go bankrupt and get hacked. That has nothing to do with the cryptos, though.
As you look forward to the second half of this year, we're not asking for investment advice, just asking your personal opinion based on all your research and awareness. Do you think that we'll end up with silver and gold significantly higher by the end of the year than they are currently? And what do you think next year will look like?
Well, technically for silver and gold, I'm thinking that we're probably near a bottom. So, the price target for silver is going to be that 22 price. That was the price we got to when we thought, we'd finally put in the bottom. We went down to around 13 something, and then we rallied up to 22, and everybody was excited. If you remember, everybody was talking about how these mining stocks are going to go to the moon and all this stuff. And it was a gigantic fake out. And basically for the last year and a half, silver has just kind of drifted downward again. So by the end of the year, yeah, I would expect us to be higher than where we are right now. On silver, maybe $20. That's about $4 higher than where we are right now. If we're lucky, maybe sometime next year we break out through that 22. Now, this is barring any type of fiscal or financial catastrophe, which could, make it just explode in value. It could cut it in half and then explode in value. That's what usually happens. As far as gold, which I don't follow that much, maybe $1,500. It was definitely a big blow for gold bugs when the nominal Bitcoin price surpassed the price of gold. A lot of people were saying, well, that's not going to happen. Well, Bitcoin ran all the way over 3,000. So that's taken the gold bugs have taken a beating with that one. But again, it's something you're investing in for the long term. And it's something, if you're stacking gold or stacking silver, you're doing so because you believe that it's undervalued, or at least you believe that it's close to its value and that can protect your savings. Whereas banks cannot be trusted to protect your savings, and governments cannot be trusted to protect your savings. So for that reason, it's a very good price, especially silver, although I even like gold and maybe even platinum, down at these prices. It's just a really good time to stack.
One more question, and that is, again, we're not asking for actual investment advice, just your opinion. And as you look at it, people who are owning a lot of stocks, those of us who may have sold off stocks, back closer to 2011 and rolled money over into silver are sitting on what an apparent, as you mentioned, 2/3 paper loss on the silver side. And meanwhile, the stock market has continued to plow ahead as central banks continue to just do anything they can to keep funding free money into the stock market. So it's a very difficult conversation to have with friends and family who are on that surface of the stretching bubble, seeing it grow and grow and grow as it continues getting inflated. But if it's making that squeaking sound that balloons do shortly before they blow, is there any virtue in people considering lightening, selling off, pulling any money that they have out of the stock market in particular, or bond market, and considering putting some of that into physical silver, even though, say, looking at the past 5 years or so, that would have been, on the losing side of the trade to this point?
Sure. Well, it's something that I've done personally. But it can be very difficult to do. I mean, you have to understand that our stock market is driven by this industry of 401k, IRA, brokerages. A lot of people don't have their hands on that money. The Congress has made it very difficult to control your own money. So, there's some things you can do. Like if you have a 401k at work, you can borrow against the value of your 401k, basically take a loan out against yourself. It depends on what your allocation is. I can tell you what I've done in the past was switch my allocation to just cash, which is going to be like, I think it's going to be 3-month T-bills option. But and then when I've seen silver at a low, I've borrowed against that and bought physical silver and then paid back the loan. That's one way that you can kind of buy the real low dips. But yeah, it's very difficult for people to get at that money. But it's not my job to convince people that they need to sell out of their Amazon and their Apple stock. And certainly if you would have listened to me a number of years ago, you would have sold out and you would made nearly as much money as you've made. So, more power to you. But the nature of bubbles and crowd behavior is that once everybody's doing the same thing, which you can pretty much guarantee that everybody's buying stock, then the nature of it is that when everybody's doing it, that's when you get a crash. And, if it weren't for that, there wouldn't be a crash. So it's kind of pointless hoping about warning everybody. It's just not going to happen. It's not the nature of the system. Most people are going to be wiped out, absolutely wiped out. And that happened in Japan in 1990, and they still never recovered. They cannot convince the Japanese people who were wiped out to buy stock again because the Nikkei went from, I don't remember what it was, 40,000 down to 6 or something at the low, 80% of its value. So a generation was soured on it. And you know how long Japan's been in the doldrums? That was 1990 when that happened. So we're talking 27 years ago. So yeah, most people get wiped out when you have the real deal stock market crash, which the dot-com bubble and bust, that wasn't it. That was just a sector. And then there was a little bear market and the Fed came in and printed a ton of money and has been printing ever since. So this one's off on the horizon. Are crashes the thing of the past? I don't think so. So when this one comes, it's going to be a big one. It's going to be probably going to be 80 or 90% bear market in stocks.
Well, Brother John F., before we let you go, could you quick give people an indication of where they can find more of your work and what's available to them, the resources that you offer?
Sure. They can find the public blog. It's brotherjohnf.com. I have a member site where you can pay monthly and sign up as brotherjohnf.biz, B-I-Z. And that's where we make different recommendations, discuss cryptocurrencies, and I release a video about every 3 or 4 days for the members site.
And we would encourage everyone who wants to support our work here so that we can break free of the censorship that's been imposed on advertiser-friendly guidelines from YouTube to go ahead and go to patreon.com/reluctantpreppers or paypal.com/reluctantpreppers. You can donate either of those places. So thank you for your generosity. And Brother John, thank you once again for being here on Reluctant Preppers.
Thanks again, Dunnigan. It was great.